Okay, welcome everyone. We're live here today, Canadian Mortgage Weekly. We're doing the rate announcement for everyone today. We're going to be doing a rate announcement for the Bank of Canada. I'm trying to start a poll. So I'm going to start a poll here, and we're here with my guinea pig. She's joining me today here. She's going to try to predict the there we go. Quick poll. Let's see here. Nope, that's not the poll I want. That's not the poll I want. How do I add the poll? She is already eating the hay. You can't do that. Okay, comment. Let's see here. Nope. Swipe to close. Okay, let's just get right into it here today. My name is Joe Bladdock. We're doing a rate announcement today. It's Canadian Mortgage Weekly. It's the last and final rate announcement for the year. And I wanted to introduce you guys to my guinea pig. Come here. Oh, she's so skittish today. Let me just remove that here for you guys. There we go. Introduce you to her. Her name is Interest Rate. And in the interest of interest rates, she's going to be joining us today here on Canadian Mortgage Weekly. And as usual, she has been on all my episodes of the interest rate announcements. Say hello. All right. She's been on my episodes for the interest rate announcement for the Bank of Canada all year this year. And she's predicted all but one out of the all rate increases, decreases, or staying the same. So that's what we're going to be looking at today, right? Interest rate. All right. So we got here some lettuce for her. We got some lettuce. It's her favorite food. And we also got some hay. And just to let you guys know, I did take a little bit of a break here from videos over the last few months here. It's been a busy time in the mortgage industry. And why has it been a busy time in the mortgage industry? Well, quite honestly, fixed rates have been coming down. Can you believe that? Fixed rates have been coming down across Canada. And with that, we've seen a lot of people get back into the market and get back into getting pre-approvals. And what they're doing is they're working on getting pre-approved at these lower interest rates. Now, how does that relate to the Bank of Canada interest rates? Well, the Bank of Canada, what they announce are interest rate for the Bank of Canada. And the banks in Canada use that interest rate to price their variable rate mortgages. And she wants to eat. You're hungry. You can't eat yet. We got to predict the rate. We use that. The banks use that to see exactly what the variable rate will be at. However, fixed rates are drawn off a different market altogether, and they work off of a different system. So whereas the Bank of Canada could be raising rates, that would affect variable rates. And if the Bank of Canada is raising rates on the variable side, then fixed rates could be doing something completely different. And what we've seen this morning, even so, is that the market that predicts that fixed rate has been trending lower. So my initial assumptions here are that we're not going to see a rate increase whatsoever. I can guarantee you that today. And I know that's a pretty big call to make this morning before the Bank of Canada has even made any announcement. But based on what's called the 5-year Canadian bond yield, you don't want to get out of there. Let's just show everyone here. My guinea pig, her name is Interest Rate. Say hello, everyone. There we go. She's joining us here today. She's going to help us predict the interest rate today. The 5-year Canadian bond yield has been trending down. And because it's been trending down, the fixed rates in Canada have gone down. I've been meeting with clients this week and last week, and their pre-approvals now that they had set up 2 months ago are now lower than they were 2 months ago. So let's go into some of the news that's been leading up to today. And what I wanted to do is bring up some of the specific news that we see here affecting what's happening with the Bank of Canada interest rate. One of the things that we see here is that the bond yield has been going down. It did peak in October, on October the 3rd. The peak bond yield was 4.415%. That is the highest bond yield that we've seen in over 15 years. And when I say 15 years, that's a long time. And fixed rates were in the 6.5s, maybe low sixes at that point. And now the bond yield today, as of this morning, as of this airing of the live interest rate announcement here on Canadian Mortgage Weekly, we are seeing the bond yield now sit at 3.43% as of 9:51 a.m. Eastern Standard Time, December the 6th. So that is huge because that it represents almost a whole 100 basis point reduction in the 5-year bond yield. We have not seen fixed rates drop that far just yet, but typically banks are a little bit slow to to lower rates when the bond yield does change, and when the bond yield does go up, the banks are very quick to raise rates. So last time we did a rate announcement, the bond yield did hit some highs, but now we're 100 basis points lower almost than last time. So huge there, huge news. I'm not sure how that's going to affect the rate announcement other than my prediction, and I think it might be interest rates prediction here, my guinea pig, that rates will at least stay the same, but definitely not go up. Okay. If we want to take a look at a couple other indicators that I typically look at on my interest rate announcement videos, that is the 3-month interbank rate. And usually that in the past has risen when we've seen rate increases. And I can see here since about November of 2023, it has been declining. Currently, it is sitting at, let's see here, 5.45%. So usually to make this, to use this figure usefully, we look at that versus prime rate. And if prime rate and the interbank rate are more than 2% of a spread, then it's actually a good time to get into a variable. And what I'm seeing now is that the interbank rate's 5.45%. The prime rate is 7.2%, which means that there's less than a 2% variance, meaning still that the variable rate is still not the best product to go into. Now, it could be the best product still with your mortgage goals and what specifically you're looking at as a mortgage customer. Perhaps there are some lifestyle goals that you want the variable rate mortgage for. And in those cases, variable still makes sense. And a lot of my clients still are considering variable because you know what? Rates may come down. And these clients are banking on rates coming down in the near future to see and want to capitalize on these decrease in rates. And what happens when your interest rate goes lower on a variable rate mortgage? Well, your payment goes down, and then you will be able to experience that immediate relief with your payment going down. Now, that's not guaranteed. We've seen a lot of crazy things happen this year in the Canadian mortgage market, and that could change on a dime, and interest rates could start going back up again. So that's the interbank rate. Another key indicator I look at here on Canadian Mortgage Weekly would be the jobs report. And as of the last report here, the unemployment has gone up 0.2%. And that indicates more people looking for work that are currently out of work. I know it's probably self-explanatory, but that is the situation there. So there we go. Let's see here. what's going on here? Why is this person trying to get into that? Okay. I don't know how to make that go away. Okay. So the unemployment rate has gone up 0.2%, and that is another indicator for rates. And if employment is going up, then rates typically go up. But in this case, unemployment is going up. So I predict that rates will stay the same for the time being. It hasn't been a large change, but 0.2% of a rise in unemployment from last month and representing a 0.5% increase since the prior year does represent enough of a concern that the Bank of Canada will not raise interest rates. All right, so we have 4 minutes remaining. 4 minutes remaining, everybody. Let's get interest rate here to make her face known. This is interest rate. This is my guinea pig. She is my mascot here on Canadian Mortgage Weekly. She's going to predict the interest rate this morning. And the way I predict the interest rate is I'm going to give her lettuce and I'm going to give her hay. Have that set aside here. If she eats the lettuce, rates are staying the same. If she eats the hay, rates are going down. And if she doesn't eat anything, rates are going up. Right? What do you think, interest rate? She says, yes, let's do that. All right. So let's look at what we have here on other key indicators. Canadian inflation rate. So what's been happening with the inflation rate? Well, as of last month, October 2023, we did see an inflation rate of 3.1%. That is a reduction from 3.8% the prior month, and a further reduction from 4% the prior month to that. So August, 4%, September, 3.8%, October, 3.1%. We are getting closer to that 2% target. And as we all know, we did have an inflation rate of over 8% in 2022. That is a crazy inflation rate. All right. So we only have 3 minutes left. Let's look at some other key indicators here this morning. And let's see here. I'm going to give her the lettuce and I'm going to give her the hay. So here's some lettuce. Here's some hay. Let's see what she does. Look, I got lettuce for you too. What do you want to do? What's she going for? Oh, she's going for the lettuce. So as I mentioned, lettuce, rates staying the same. Hay, rates going down. And eating nothing, rates going up. So United States inflation, well, it also went down for October, a decrease from 3.7% to 3.2%. Another large decrease in inflation in the United States. Welcoming news for anyone that is holding a mortgage right now, because that means no more rate increases, in my opinion. We have 2 minutes left until the Bank of Canada does make their decision here and releases it. I'll be able to read this off to you live. One last key indicator I would like to look over is the Canadian housing market stats. And in the last 1 month, for October 2023, we have seen a 0.17 increase in housing prices in Canada across the board. That is an increase in housing prices. The average sale price now in Canada sitting at $656,623. What a fantastic time to buy a home. House prices really haven't been changing, but we could possibly see variable rates not increasing any longer. And like I said, fixed rates have been going down. We have 1 minute remaining here. And as we see here, my guinea pig, she's eating lettuce. Let's show her. She's just chewing the lettuce. You can see here. All right. All right. And the Bank of Canada has released its report. Let's take a look at this together here. What are they doing with interest rates, everybody? Can we get a guess here? If you think that Bank of Canada raised rates, put yes. If you think Bank of Canada did not raise rates, put no. Love to hear your comments. And here we are. So the Bank of Canada did release its rate right now, looking like it's maintaining the rates where they are at. So no increase, no decrease. Interest rate was right again. She has predicted the interest rates yet again. So let me go into some of this report here. We'll dive in together and we'll just take a look at what it's saying. And thanks for joining me today. This is Canadian Mortgage Weekly with Joe Bladdock, Canada's weekly mortgage news podcast. All right. So looks like there's comments about the economy slowing. And there's also some verbiage here about inflation easing further. Now, we just went over that. We did talk about that. Inflation has been easing in Canada. We did see it decrease now. We have Canadian inflation currently sitting at 3.1%, down from 3.8%. So that's great. In the United States, however, it does show that growth has been stronger than expected because of consumer spending. All right. So there's some talk about the euro, lower energy prices, reduced inflationary pressures. There also is some comments about oil. So what are the comments about oil? Oh, you're loving that lettuce, eh? All right. So we have here that oil prices are about $10 less per barrel than back in October. So when oil prices go down in Canada, we do see the government take that pretty seriously. I don't know if you remember, but back a few years ago, when oil prices dipped considerably, we did see a lowering of the Bank of Canada target rate. No lowering today. I'm welcoming a stay all day long because I do not want to see my variable rate mortgage go up any further. All right. What is it saying about Canada's economic growth? Well, in Canada, economic growth stalled through the middle of 2023, showing that GDP contracted at a rate of 1.1% in the third quarter, 1.4% in the second quarter, and the consumption in the last two quarters was close to zero. So, showing that wages have risen 4.5%. The overall extending comment here at the end of this whole remark is that excess demand is no longer in the economy. All right. And because of that, showing here in that monetary policy report that the slowdown in the economy is reducing these inflationary pressures in Canada across all goods and services. Drop in gasoline prices, which I've seen at the pumps. I'm sure you've seen that at the pumps as well. And if you're just joining in today to Canadian Mortgage Weekly, Canada's only weekly video mortgage news podcast, I wanted to share with you that the Bank of Canada has not raised interest rates this morning. Rates have stayed the same. They are not going up. They are not going down. There is a stay on interest rates today. That's awesome news. No interest rate increases today from the Bank of Canada. We're just talking right now about some factors that the Bank of Canada used to make these decisions. And some of them are lower inflationary pressures, a slowdown in the Canadian economy, which they are acknowledging here in their monetary policy report, and some exchange issues with the euro. All right, what else are they saying? Also, lower oil prices. That is a huge factor. So, what are they saying here about this? Okay, rent is increasing fast, and looks like they are commenting that the October data for inflation has come in lower on the lower end of the range that they were expecting. So that's good. And they go on to comment that their monetary policy is moderating spending and relieving price pressures as they had planned all along, and that the government decides to hold the policy rate where it is at. So if you guys are just tuning in now, the Bank of Canada did not raise interest rates today. And what we are seeing is that prime rate will stay at 7.2% today. So if you really think about it, 7.2%, that's quite a large and high prime rate. Prime rate's the rate that all banks in the A side, prime lenders, use to base their interest rates off of. And when prime rate is at 7.2%, that's quite a high interest rate to qualify for. Keep in mind, if you're getting prime rate 7.2%, all consumers in Canada wanting a mortgage need to qualify at a plus 2% stress test. So, what does that mean? We need to qualify at 9.2%. That is such a high interest rate that many Canadians, even making over $100,000 a year, have a very difficult time qualifying for a house in the price range that is reasonable in their market. All right. So, what's going to happen now that the Bank of Canada has decided to keep rates where they are at and not increase rates and not decrease rates? And because the Bank of Canada has decided to keep rates where they are at, prime rate will stay at 7.2%. We will not see that change at all. If you have a variable rate mortgage, you will not see any changes. You will not receive any letters from your banking institution this month advising of a payment change. And if you have a mortgage where it is a variable rate, but your payment stays the same, you should expect the amount of time that you pay off your mortgage for to also remain the same. The amortization will not increase. The amortization will not decrease. In Canada, we have these two types of variable rate mortgages. One is where the payments go up and down, where if the rates go up, payments go up, but your amortization stays the same. So you're still paying off the mortgage in the same amount of time. And there's a whole other different animal of a variable rate mortgage, and that is where you have a static variable rate payment. That might sound crazy, but it's a static payment, but it's a variable rate. And how that changes your mortgage is essentially if rates go up, you have a longer amount of time to pay off your mortgage now. So it can increase your amortization by a few years each time rates go up. We've seen mortgages in Canada hit 50-year, 60-year amortizations with all these rate increases. And if you're just joining me now, rates are staying the same in Canada. The Bank of Canada has decided not to raise interest rates today. They are not going up, not going down. Interest rates are staying the same. Prime rate is staying at 7.2%. Now, on the flip side, fixed rates have been going down for the last few weeks in anticipation of no increases today. And why do fixed rates go down when variable rates do not? Well, that's the market pricing in what they think is going to happen with interest rates. And right now, I have seen fixed rates go down the last 2-3 weeks. People have been coming back to me to reset their pre-approvals at a lower interest rate. Specifically, the lowest rate right now in Canada is the 5-year fixed. The 5-year fixed is coming in the lowest, with the second lowest rate being the 4-year fixed, and the third lowest rate being the 3-year fixed. Now, what else is going to happen now that the Bank of Canada has decided not to increase interest rates? Well, the other thing that is going to happen is that lines of credit, they are typically variable rates as well. They will stay the same. There will be no increase in your minimum payment, and there will be no increase in the amount of interest you need to pay each month. That applies both to variable rate lines of credit that are unsecured and secured, because both of those typically are variable. And if you have a variable rate car loan, then you will not have any increase in interest on that. Typically, variable rate car loans are a static payment, but it's the amount of time that takes off to pay off that loan either increases or decreases. So we will see no changes there as well. If you're just joining me now here, my name is Joe Bladek. This is Canadian Mortgage Weekly, episode 162, Canada's only weekly video mortgage news podcast. And we just saw that the Bank of Canada decided not to raise interest rates. And some of the summary here that we took away from the monetary policy report released here is that economy in Canada has slowed, the inflationary pressures have gone down, And inflation has gone down in Canada to 3.1%. We are approaching that 2% target that the Bank of Canada has been trying to get at all along. And overall inflation has been trending down since the middle of 2022 when the Bank of Canada and interest rate hikes had started to take effect. So, what do you guys think is going to happen on the next interest rate announcement? We won't have any other announcements for the rest of the year. This has been the last and final interest rate announcement for Canada for 2023. What do you guys think? Do you think rates will go up on the next Bank of Canada meeting? Do you think rates will go down on the next Bank of Canada meeting? I know that house prices did go up last month, and that is a very interesting conundrum, because with house prices going up where rates are at, it's hard to see why that is. People are having a very tough time qualifying. And most of the people that are qualifying for a mortgage these days, well, what they're doing is they're seeing that they're getting co-signers on board to help them qualify for that mortgage. So let's take a look at the next interest rate announcement here, the 2024 interest rate announcements. So we will have the next Bank of Canada interest rate announcement on January 24th, which will be a Wednesday. That represents about almost 2 months from now, we will have that next interest rate announcement. So it'll be interesting to see what happens on that interest rate announcement here on Canadian Mortgage Weekly. We will have some more. We'll have 1, 2, 3, 4, 5, 6, 7, 8, a total of 8 rate announcements in 2024. And that is typical. We usually do see 8 rate announcements from the Bank of Canada each and every year. The next one in December will be on December the 11th, which is also a Wednesday. So we typically do see these on Wednesday. So if you're just joining me here today, the Bank of Canada decided not to raise interest rates today. Bank of Canada decided to keep its monetary policy rate the same, keeping prime rates where they are at now. Of course, they are super high, 7.2%, and they're going to stay there for the time being, at least until the next rate announcement, which is January 24th. Now, with the growing unemployment that we are seeing in Canada, as I mentioned, we had a 0.5%, so half a percentage increase in unemployment last month. We did see a drop in inflation last month, and we did see house prices increase last month. So with all that in consideration, as well as the lowering bond yield, we may see rate reductions in 2024 if these trends continue. I don't think that they will happen in January. I think that the earliest time, if these trends continue, that we would see any rate reduction from the Bank of Canada would be possibly in spring, summer of 2024. But that's only if we will see any changes from the Bank of Canada. If we do see those changes, I know myself as a variable rate mortgage holder will be super excited to see these changes, because as a variable rate mortgage holder, we will experience the immediate impact of having a lower interest rate and a lower payment if you're on a non-static variable rate payment mortgage. However, if you're on a static payment variable rate mortgage, you'll see your amortization shorten if your interest rate does go down. So those are some of the news points coming out of the Bank of Canada this morning. If you're just joining me today, the Bank of Canada has decided to keep interest rates where they're at. Interest rates are not going up today. This has been the final announcement for 2024. It's a pretty exciting announcement, I would say, for sure. And we were joined today by my mascot, Interest Rate. She's my mascot here on Canadian Mortgage Weekly. She correctly has predicted the 7 out of 8 interest rate announcements here on Canadian Mortgage Weekly this year. Not a perfect record, but a pretty good record. And today she correctly predicted that interest rates would stay the same. And she's eaten all my lettuce as a result that I've brought her. No, here's a little piece here. Got another piece. Would you like to eat that? Nope, she is now full. So with that, I wanted to say thank you for watching. This has been Joe Bladdock for Canadian Mortgage Weekly. I did take a break from my podcast in October and November, restarting it for December and looking forward to putting out some additional new content weekly again here on Canadian Mortgage Weekly Live. We are looking forward to next week's episode. I haven't decided yet on to what date I'm going to put this podcast on. Usually it's been on Thursdays, but I might change it this time around going forward. There will be some exciting news coming out of my office next year as I chat about mortgages and real estate. As all you watch here today, thanks for watching. If you have any comments or questions with regards to your personal mortgage, please do direct message me on any platform that you see me available on. I'd be happy to go over your mortgage concerns and help you make the right decision for your mortgage. I'm a mortgage broker with 14 years experience in the industry. And looking into 2024, I hope to help all my clients with real estate and mortgages the way I have been for the last 13, 14 years on the mortgage side. So thanks for watching, everyone. Hope you have a great day, and we'll see you next time.